Hello, everybody. Welcome to Zoe's Treasures. My name's Tracy. And as always, here with my husband, Noel. He's in the background doing all of the graphics and running our cameras for us. So tonight is our tax chat show. So we've been doing these for the last few weeks on Friday nights. Really just kind of like an open forum. Ask your questions if there's anything you're going through right now in tax season. That's why I'm doing these shows. If you happen to be new to me, I'll give you a very quick synopsis of my background so you have a little bit of an idea on who's talking to you. So my name's Tracy. I am a CPA, been a CPA for since 2013 is when I was first licensed, but I've been in the field for over 30 years. I am licensed in 2 states. I have a master's degree in taxation. I've worked doing taxes and doing audits and with multiple businesses over the course of my career. So I bring to you a little bit of experience and a little bit of background on taxes and accounting. And the reason why I do these shows is because there's a huge need on Whatnot. There's a lot of talk shows about how to run a show, how to get more viewers, all those common things, how to do shipping. But there's not a lot of good advice, of good, solid, legal, real advice on taxes and accounting. So that's why I'm doing these. In the mornings, on Friday mornings from 7 to 9, I do a business and tax show, and that is very structured. I have topics. We have a 52-week layout of stuff we do every single week. But here, it's just really open. So I have been going piece by piece through the Schedule C. Tonight, we're going to talk about the cost of goods sold section of your Schedule C. So we'll talk about that a little bit. But really, I'm here to answer questions, or if there's something on your mind or something you just always wondered about on taxes, feel free to put it in there. If I can answer it, I'll answer it. And if I can't, I'll tell you that, you know what, I don't know that. I need to look that up and come back and tell you. All right, let's see. What are we going to start with? Until I see questions, I'm going to just kind of keep rambling. Hello, Moody. Schedule C. So for those of you, maybe this is your first year. Maybe you've been doing this a while. So we have, I'm sure, all varying levels of experience in reselling and dealing with business taxes. But your Schedule C is just a tax form, and it goes along with your normal 1040 tax form. You're probably all very familiar with the 1040. That's your standard as an individual or a married couple. This is what you file. That is a 1040. Your Schedule C is just a piece of paper that attaches to it. And that Schedule C summarizes everything that happened in your business and lets the IRS know what is your net profit that you need to be taxed on and how much self-employment tax you need to pay because of that business. If you run multiple businesses, say you have Whatnot and you also do drive for Uber, that would be 2 separate Schedule Cs that would be on your tax return. So our focus really is going through that Schedule C, is going through the business portion of it. So you really understand. If you've been following along on Friday nights, you will be able to go back. We also broadcast this on YouTube, so you can always go back and see. A couple of weeks ago, we did the very top section of the Schedule C. eBay and Whatnot would be the same because that would be reselling. That's the same type of a business. So that you can combine into one Schedule C. On your spreadsheet, what is the difference for USP labels versus shipping cost for VT001? I'm going to have to go and look at that off the top of my head. I don't know. VT001 is not ringing a bell to me. But I will take a look and let you know. I'm just writing it down so I can go take a look as soon as the show's over and reply to you. Oh, okay. I'll go and check. Sometimes the emails with Whatnot, they go into that other separate folder and I don't see them all the time. And also my husband monitors a lot of the emails for me. So occasionally they do get missed. So I apologize for that. I will definitely go and look and make sure I get you an answer this evening. I created a DBA under my LLC. I applied for my DBA to sell items. What should I be paying attention to this year? I updated my taxonomy as well. You did email me. I saw, Jennifer, I did see your email. I just haven't had a chance to reply today yet. So you created a DBA under your LLC. I'm not too sure why you would have. That's a little confusing to me, and why there's a DBA under the LLC, unless your LLC is in a name you just didn't want to operate under, so that's fine. And you applied to sell items, which is fine. There's nothing really special you should be paying attention to. Everything we're talking about, I am assuming you're a single member LLC, which means you're still going to file a Schedule C. If you're a single member, just you or you and your spouse together filing a tax form and you own that LLC, then you're still going to file a Schedule C. So everything we talk about still applies to you. There really isn't anything special on your Schedule C. So it's all the normal income and expenses, home office, vehicle deductions, all of that stuff would still apply to you. And there's nothing really different. A lot of people will create an LLC. I'm going to start a giveaway, you guys. These are for my CEO affirmation cards. We got a few of those today. A lot of people create an LLC because they're told, oh, you get all these tax savings with an LLC. Our LLC is counseling and created the DBA for whatnot. That would really be two separate Schedule Cs then, because those are two very different businesses. So you would do your LLC is counseling, then you would file as a sole proprietor for whatnot, not a doing business or not a LLC. So those are two very different businesses. So you would file two Schedule Cs for that. And you would just segregate out the income and the expenses based on which business it would apply to. But other than that, there's nothing particularly new for business. There are some new tax laws that did affect the filing requirements on a 1099. We've talked about that almost every single show. We mentioned what those were. Those changed in the middle of the year. And all those is that when whatnot is required to send you a 1099, it does not change how you report your income whatsoever. Okay, should I get a different EIN for the whatnot then? You do not need an EIN for whatnot unless you want to set up a separate bank account that's not under your personal name. Like if you want to set up a business account for your whatnot, you would need an EIN, or you're paying employees. But it is not necessary to get an EIN for whatnot. Some, if you buy wholesale or pallets, sometimes they require an EIN. That may be another reason. But just because you have a sole proprietor and you're filing a Schedule C doesn't mean you need an EIN. Should you have separate account for whatnot funds? 100%, Sam Dog, 100%. That should be the number one thing that you do when you start business, is to create a separate account. Now, it doesn't have to be a business account. You can be a person, you can just do another checking account under your personal name. There's some banks are a little touchy about that, but in general, there's no reason why you have to go and create a business account, just a separate account. Can you include other platforms? Yes, you should include other platforms. So on your Schedule C for whatnot, if you are also selling on eBay, Poshmark, Mercari, any of those, all of them, if you've met the requirement of $20,000, 200 sales, will send you a 1099. You combine all those 1099s together and report all the income and all the expenses on one Schedule C for your like-kind business. So I'm reselling on whatnot, reselling on eBay, reselling on all these other platforms. That's the same business. Whereas earlier in the chat, we were talking about doing counseling and reselling are two separate businesses. So that's two separate Schedule Cs. Okay, but should they have separate bank accounts? No, just one bank account's enough to run your business. So you only need one. What I would suggest, for every Schedule C you file, for every business you have, you need a new bank account. So just because you have multiple platforms you sell on, it's still the same business selling on multiple platforms, one bank account. The earlier example of somebody having a counseling business and a whatnot business, that's two separate types of businesses that should have two separate bank accounts because they're completely different. And you don't want to mix your expenses from counseling with your expenses from whatnot. Same would be if it wasn't counseling. If you were an Uber driver and you were doing whatnot, those would be two separate businesses, two separate business accounts. The reason why we talk a lot about separating your business and personal funds, one, it's so hard to keep track if you commingle everything. You don't have a true understanding of what your revenue or your income is. We'll be going Monday after I can't get my CPA in. Oh, that's sad. I'm so sorry about that. They are super busy right now. So I would be a little kind to a CPA right now because they are all working like 80 hours a week. But they should still take some time to answer, at least within 2 or 3 days. Oh, Moody, thank you so much. I have been buying inventory, but have not started selling, other than selling a few things. Okay. Am I allowed to write? You know what, Ladina, this is the exact topic I was going to talk about tonight. Oh yeah, here, let's talk about this. Look at, this is an example I do. Ladina, we're going to talk about inventory. Don't go anywhere. I've got a perfect example for you. Hello, forgotten memories. Okay. When we talk about bank accounts, this is something I like to do visually because it really like drives home the effect of the business account. So let's put inventory aside. We're going to get there. Let's just focus on business accounts. Imagine this is your business account, right? Can we talk about when we sell our own stuff? Yes, we can, Moody. Just remind me in a little bit. We definitely will. Imagine this is your business account, okay? This is your business bank account. It's really easy to see how much money you have, what's going on. Totally clear. You know this is business, right? Who's going to get that? Sam Dog, you got that giveaway. Congratulations. This is your personal account. Same thing. Super easy to see what's going on. You know how much you have left, how much you spent, okay? But when you mix those two together, you don't know what's what. And if I give you this mix together and I say, tell me how much your business expenses were, you get a screwdriver. That's right. Tell me how much personal money you have in here. As a matter of fact, tell me how much you spent on groceries personally versus how much you spent on shipping supplies. It's really, really difficult. It's very hard to separate it out after the fact. So I always use this visual because it makes it like really clear to see why it's so important to have that separation. Now, if you've been in business for a while, you've been doing whatnot, and you're like, ugh, I didn't do any of this. Hello, Lintro. I haven't separated anything. That's okay. Oh, I got water all over my notes. That's okay. Go back and do it. You go back, you figure it out, and now you know, go get a separate bank account. Moody, that's you. It's okay to be like, okay, I didn't do this. Lesson learned. I'm going to fix it moving forward. Don't beat yourself up about it. Now you know. Now you fix it. It's really simple. This is thank you. I need to start using a separate credit. Exact, and not just bank accounts. You hit on a really good point. Separate credit cards too. You don't want everything mixed up. Now, does it happen? It happens. I occasionally, my business card, my business debit card and my personal debit card look exactly alike, and I just wrote on Sharpie on the front of my business one. I know I can get another picture. I'm just lazy. I haven't done it. And I have accidentally pulled my personal card out and used it for business. If it happens occasionally, it's not that big of a deal. You just record it in your books. You're fine. But in general, everything, credit cards, bank accounts should always be separate. And it's not just for you, not just for your bookkeeping, but also if you're audited, how do you prove to the IRS? How do you say, well, this was really business? And they're going to be like, really? That's Publix or that's Kroger's. How do I know that's business, right? Did you say that all of these shows they are on my YouTube, and it is the same name? There it is right there. My husband's one step ahead of me putting that up there. Taking you months to do your numbers. Yep. Terrible about separating. It gets hard, especially at the beginning, because at the beginning, a lot of us start out with very little money, and it's like, okay, I'm going to take 20 or 50 bucks from my bank account, and I'm going to go see what I can do. And then all of a sudden, it's growing, and things are mixed up. But it's common. It happens to a lot of us. I'm about to start a W-2 job to help pay off my business debt. Is this something you can talk about? I can. So if having a W-2 job, I have a W-2 job. I work a 9-to-5 job. And having it pay off your business debt is no different than paying off any other debt, in the sense that if you're operating as an LLC, a single member LLC, the IRS isn't looking at owner contributions or distributions. The IRS, and I'm talking just IRS purposes, could care less what you put into the business or what you physically take out of the business. What the IRS cares about is what is the net profit at the end of the year that you will be taxed on, okay? So let's just do a really high level example. Say you made $10,000 in sales, you made all of your expenses, inventory, everything all added together was $5,000. Your net profit is $5,000, okay? The IRS doesn't care if throughout the year you pulled out that $5,000 and went and paid creditor A, B, C, or D, or used it to go on vacation. And you come to tax time and you have zero left because you spent that $5,000 on something else, whether it be debt or anything. The IRS doesn't care. The IRS says you had a net profit of $5,000. Now you need to calculate the tax on that net profit and pay us. So what you're pulling out of your single member LLC or your sole proprietorship, they just don't care. So pull it out and use it in a sense that makes sense for you, in a way that you need to. I mean, at the end of the day, it's your money. So I hope that helps. Let's talk really quick. Let's go and talk a little bit about inventory, since we did have that question, because I think it's a really good topic, and it's one of those things that people, it's one of those controversial things, in the sense that I am sure you have all heard, you don't have to count your inventory, just write it off. It's inventory, it's an expense. Yes and no. And I'm going to walk you through and show you what that looks like on your tax form, and the two different methods that you can use, and why you would want to use one or the other. Like, what effect does it have on you? So let's take about 10 minutes and do that really quick here. Can you pull up a Schedule C for me? So we're going to bring up the Schedule C. We're going to make it a little bit bigger. Okay, so right there, it says line 4, cost of goods sold. Someone said something about loaning it to yourself. No, you don't have to, unless you're like an S Corp or something that distributes a K1, that none of that applies to you, Jennifer. Okay, in the income section, there is a line right there, line 4, where it says cost of goods sold. And then it says from line 42. So this is, you're going to report your income, and then you report how much did your inventory cost you. That inventory you sold, how much did it cost you? So let's go down to line 42. Let's go to our cost of goods and really look at what are we figuring out here. So here we go. Oh, scroll up. Scroll up, my love. Up towards the top. There we go. A little bit more. A little bit more. All right. Now make it just a tad bit smaller. So there we go. We are in part 3, cost of goods sold. And you can see at the bottom of that part 3 is line 42. So ultimately, what we want to do is get down to that 42. But before we can get to line 42, we need to understand what's going on with our inventory. So the very first question that your tax form asks you, and these are the same questions if you're using TaxAct, TurboTax, whatever tax software that's out there, Free Tax USA, these are the same questions they're going to ask you. It may just be worded differently. They're all operating off of the same tax form. So the first question, line 33, says methods used to value your inventory. You have cost, you have lower of cost or market value, and you have other. I'm not going to go into other because as a whatnot person, it's probably less than 0.001% of people that would choose other. So I'm going to stick with the first two that are the common ones. Cost is the absolute most common. You started free tax and got stuck 2 weeks ago. Well, just hang out, Moody, and maybe we can work you through it here. So cost is the most common. Cost is nothing but what you paid for that inventory. You go to Goodwill, you find something for $2.99. That's the cost of that item, $2.99. So that cost is nothing but exactly what you paid. It also includes, if you bought it on whatnot, any taxes or shipping. So the cost is the cost to get that item, to acquire that item. So the item itself, tax and shipping. Okay. If you had to make an improvement to that item, say you got a shirt at Goodwill for $2.99 and you needed to take it to a seamstress to fix something, you would record the $2.99 plus whatever the seamstress is. That would be the total amount. Okay, so that's cost. If you don't do cost, you do lower of cost or market. So market would be the market value. This is really on you, or to wash it. Yeah, if you had to dry clean it, the cost of dry cleaning an item could be considered part of that acquisition cost. Lower of cost or market is cost or market, and the lower of either one. Now, when you pick one of these, you got to stick with it. This is one of those things that the first year you're in business, you elect how you're going to do your inventory and you stick with it. We're going to focus on cost because 99% of everybody on whatnot is going with cost. That is the most common. The other ones are there because the Schedule C just isn't for resellers. The Schedule C accommodates all kinds of different businesses. And for other businesses, the lower of cost or market may make more sense. For us, it's cost that makes the most sense. Good, Moody, good. Okay, so we've established we're doing cost. Let's just kind of go with that. Now let's go back to our next line. So now we know how we're accounting for our inventory. It says, was there any changes in determining quantities, cost, or valuation from opening and closing inventory? And here you can say, if there's any changes in how you determine that, have you gone from cash to accrual accounting? Did you change your accounting method here? If you changed your accounting method on how you account for your inventory, this is where you mark it. Again, that's a very rare situation. There's times when it happens, there's times where it's legit, but in general, it's not something you're going to see like that are be doing year after year. It's usually like some very rare occurrence. But let's talk about this, because as a sole proprietor, as a small business, you have the option on whether you are going to expense all of your inventory or you're going to account for your inventory on what's called accrual basis. So the IRS says if you are a small business, and a small business, they classify a small business if you made less than 31 million in the last 3 years. Any of you made less than 31 million? I have. I mean, it would be nice if I didn't, but right? So most of us could fall under this small business exemption. So the IRS says, hey, you know what? We're going to consider you a small business. And in order to save you some time and effort, you don't have to account for your inventory. We're not going to make you do any of this. You're just going to skip this whole section altogether. Almost there. Yeah, I know. It's just that last little bit. You know, if we can just get our bids just a tad bit higher, right? So the IRS says, you don't have to worry about it. If you qualify as a small business, you don't have to keep inventory. Okay, that's fine. Well and dandy. I want to show you why you want to keep inventory, okay? Just because the IRS says you don't have to, that's great and easy for administrative purposes, okay? It's one less thing you got to track, right? So you're thinking, sign me up, one less thing. But let's wait. I want to show you in real numbers what that means to you in your business and on your tax return. So let's go ahead and we're going to switch over. I'm going to show you my iPad here, and I'm going to write some numbers out so you can see what this looks like. All right, let's see. I got to mirror this to make it work. Let's see if it's going to come up. It's working? All right, so let's switch over to that. Okay, so I'm going to write some numbers. So we're talking about what's the difference in keeping cash or accrual inventory. So I'm going to show you cash to begin with. Ignore my writing. I have terrible handwriting. And let's pretend that in 2025, we're doing a tax return, and we're doing a tax return in 2026, okay? In 2025, for my inventory, I bought, can we see that? Do I need to scoot over? All right, hold on. Let me erase that and scoot that over. Just pinch. There we go. All right. That's supposed to say inventory. In 2025, I spent $10,000 on inventory, okay? So we spent this money in 2025. I bought a crap ton of stuff. I spent $10,000. Then I went and sold all of it. Not all of it, but I went and sold a bunch of it, okay? So I sold and I made $12,000 because people were bidding. I was an awesome whatnot seller. People were bidding. I made $12,000. But I didn't sell all that inventory, okay? I only sold $3,000 of that inventory. So what does that mean? That means I have $7,000 of inventory still sitting in my back room on my shelves, right? Waiting to be sold in 2026. So when I look at this, before I look at any other expenses on my tax return, if I, using cash, if I made $12,000 and I subtract the 10, I have a profit of $2,000 before any other expenses. We're just going to ignore other expenses just so we can focus on just inventory, okay? So before any other expenses, I have a profit of $2,000. Now, that's in 2025. Now let's move forward to 2026 so you can see what happens when you elect the cash method. I'm in 2026 now. Let's just say I bought an additional $5,000 of inventory. So now I have $12,000 of inventory sitting on my shelves ready to sell on whatnot, okay? I'm good. I'm in year 2. I'm killing it. I'm rock and rolling. And I sell $20,000. I have $20,000 in sales. I'm like loving life, right? Okay. But let's figure our net profit now. I already took this $7,000 over here. I already used that $7,000. I expensed it in year one. I don't get to take that tax-free in year two. I only get that in year one. So now I still have $12,000 sitting on my shelves, but I only paid out $5,000 this year. So now if I take $20,000 minus my $5,000, I made $15,000 in profit in year two. Okay? That's a huge difference right there, right? Because what I'm not doing when I'm using cash is matching up the actual expense of that inventory to the sale of that inventory. If I take it all in year one, I can hurt myself in year two. Now, don't get me wrong. If you're going to talk to your CPA and tax accountant, there are legitimate times when this makes sense. There is reasons why using the cash method is preferable. There's also times when it's not. Let me show you the other method so you can really understand the difference between the two and then judge for yourself. Because I can't tell you which one to do. I can just show you the difference between the two so you can make an educated decision or at least have that base understanding to go talk to your CPA about it. So let's go down here and we're going to do accrual accounting now. Okay? So we're going to use the same numbers but with accrual. So inventory the first year, I bought $10,000 and I had the $3,000 is what I actually sold in inventory. So I spent $10,000, but I only sold $3,000 of that, right? Okay. So we sold our sales, we made $12,000 when we sold it. Okay. So if I take my 12 minus my 3, now my profit shows $9,000 before any other expenses. Let's go to year two. If I'm going over to year two, I have $7,000 of inventory still sitting there because I didn't sell it. Remember, I bought $10,000 right here and I only sold $3,000. So I still have $7,000 sitting on my shelves. I'm in year two now. So year two, same thing. I'm rocking and rolling. I'm killing it. I make $20,000 in sales because we're using the same example. But I also purchased, in addition to that $7,000, I also bought another $5,000 of inventory. So I have, my total inventory is $12,000, right? Okay. Let's say we're gonna skip. Hold on, we're gonna rewrite this. I can't use my eraser. I'm not good at that. Okay. So I have $12,000 sitting in inventory in my back room for me to sell and whatnot. I make $20,000. In order to make that $20,000, I sell $8,000 worth of that inventory. So I have $4,000 of inventory left. Okay. I made sales of $20,000. In order to make that $20,000, I sold $8,000. There you go. Bring it up. Okay. So in order to make that 20, I sold 8. You guys following along with that? So if I take 20 minus 8, my profit is $12,000. So look at 2 years, 2 methods, very different profit at the bottom. When I did cash in year 2025, is there a way to write off what you don't ever sell? No, it sits on your books as an asset. So you don't write it off until you dispose of it. You dispose of it by selling it, giving it away, throwing it away until it leaves your possession. So as long as it's yours, it's an asset sitting on your books. But what I really want you to focus on for a second here is when we did cash, Propest with a party of 13.
Welcome in, Raiders. Glad you can join us on this business and tax discussion.
We're going to stay on the example. We'll come back. Propest, thank you so much for the raid. Normally we bring up your profile, but we're in the middle of an example here. So please, please, please put in the chat what you sell, when you sell it, when your next show is, so that everybody who likes that can go and follow you. And thank you so much. Those of you coming over with Propest, we are doing a tax show right now. We're going over your cost of goods on your Schedule C. Riveting information on a Friday night. So stay tuned, hang out, and you might learn something like amazing. All right. So what we gave, let's just recap. We gave the example up here. This example is, I'm using the cash method. $10,000 of inventory, year one, I only sold $3,000 worth of that inventory. I have $2,000 of net profit. Year 2 is $15,000. Okay. I come down here to accrual. I have $9,000 and $12,000 using accrual because I'm only taking the expense for the inventory that I actually sold. And you're sitting there, okay, Tracy, well, why do you want to do it? Looks like you have more, you got to pay more taxes. Possibly. However, business accounting isn't just about taxes. Business accounting is also about focusing on your numbers and using those numbers to make business decisions. When I look at the accrual, I can match up the expense of that inventory to the sale of that inventory. So what does that allow me to do? That allows me to get my margins. If you go back to cash, there is no way you're getting your margins. You don't know what your profit margin is because you truly did not match up the item to the sale of the item. But if I go down here to accrual, I can look at this and I can say, I have profit of $12,000 because I sold the 20. This gives me a 40% profit margin. Now that I know my profit margin, I can make true business decisions. I know now I can source better, I can spend more, spend less, but it gives me usable data that I can use in my business. It's not just about tax. In addition, look at these numbers, 9,000 to 12,000. So you had taxable income before other expenses of 9,000 in year 1 and 12,000 in year 2. That's pretty smooth. That's not a huge difference, right? What does that do? That helps you predict your taxable income, which helps you know what you pay in estimated taxes. Okay. It all flows together with each other. Okay. When I have predictable income, I know what's happening. We're not talking a lot about estimated taxes. We can go into that in a little while if you want. But having the predictability is key in so many things. But if I go up here to cash, 2,000 to 15,000, that's a huge swing. And what happens if you don't make any profit the next year? Then it goes the other way. So using cash is acceptable and it's very legitimate. We're going to be done with that example. Thank you. It's acceptable. I already told you the IRS allows you as a small business to use cash. It's totally okay. But whether you want to or not is a business decision. Whether you should. If you are, like, look, I don't care about my numbers. I make all my decisions by my gut. I don't ever look at my numbers. I don't use those to make any decisions. Okay, I'm cringing over here. The CPA in me is like screaming inside my head on that. But that's okay because it's your business. If that's you, you're totally okay to use that cash method. If your CPA says, we've looked at your projections, we know what you're planning, and you sit down with your CPA and you sit down with your financial advisor and they look at all the facts and circumstances and they say, you know what, the cash method makes the most sense. By all means, use the cash method. But using the accrual method ties you back to your financial statements, real financial statements. The only way that in your business that you're going to do financial statements that are accepted by a bank, if this is your full time and you ever want to buy a house, buy a car, get a bank loan, those lenders are going to ask for a set of financial statements if the bulk of your income is coming from I'm sorry, my love. Yes. If the bulk of your income is coming from self-employment. In order to get true financial statements, they need to be on the accrual. They need to be on the second one. Cash financial statements aren't proper accounting. So I hope that made sense with the cost of goods. That's really what we wanted to explain. I was just asked about that. The self-employed buying big purchases. It is, yes. When you're self-employed and you want to buy something like a home or a car, you have to produce financial statements. Why? Because that's your W-2 for your business, right? That's your proof of income. It lets you know how much is safe to spend on inventory it does. It gives you exactly. Ladina, you've hit the nail on the head. If you're doing accrual accounting and you match up your actual expensive inventory to what you sold in inventory, it gives you a better idea of what you've done and where you're going and what to do, how much to spend or not to spend, where you can make adjustments. Now, we haven't even talked about all the other expenses. We're just looking at the very top of your Schedule C on income and cost of goods. We haven't even touched on everything else yet. Go ahead, my love. Let's see, what am I missing here? I'm sorry. I ended up with a lot of inventory left, and I think it hurt me on my. Yes. What happens with taxes with accrual? I used cash. So with the accrual, that's what I just. I'm sorry, my love. Yes. Please get in the microphone and tell me what you need to say. Okay. So that's what I was just saying. When you use cash, you take all that expense at once, and sometimes it can hurt you in year two. So with accrual, it smooths out that inventory. You're matching the expense to the income. It makes it more true to form. You have not filed yet. Okay. Let's see. My husband's telling me I missed a comment. So let me go up here.
No, this is riveting conversation, but for the people that just came in and came in with the raid, I really think we need to thank them because they brought their people over. So I would like to take this moment to share with you the profile of ProPass and see if you're interested.
Normally when somebody raids us, we always show their profile, but we are in the middle of an example. There you go. This is ProPass. Look at that. Huge following. Oh my God. I am jotting your name down for our Big Kahuna's raid train. Okay. Let's go down and see what you sell here. Fast, all the good stuff, all the good customer service stuff. And do we have any shows coming up soon? Right there. And you're in storage units. Awesome. ProPass, I'm going to reach out to you. Thank you for rating. I appreciate it. Y'all, if you want some really cool storage unit stuff, and you can see they have some believe in strong customer service there, now you know where to go.
And they also have a community show, Q&A. Interesting.
I
Would like
love
to
me a
visit.
good chat show.
Thank you, ProPass.
Thank you. All right. So what do you do this year if you have to do the same? So what do you do this year? You have to do the same next year. Yes. Once you pick something, you need to stick with it. Now, there are ways to change it, and it just involves filing another form with the IRS. There is ways to change it, but you don't want to change it over and over and over and over again. It really messes up your record keeping. It's not a very simple thing to change, and it's not something that's common. There may even be rules, I'm not sure off the top of my head, about how often you're allowed to change it. So I need to change to accrual, file that way, and my inventory doesn't hurt me. Yes, I always recommend accrual because it's true to form. However, like I said, there are legitimate times where cash is better. But you have to look at the full picture of what happened and what you plan, what you expect to happen to really get that full picture. Some of my inventory will be from my mother-in-law's estate this year. How do I account for free inventory that I sell? If it is free, it is free. That is zero on your books. So now if it is a value to you, if there is an inheritance, which there may be because it came from the estate, usually with inheritance, there's a step up. So you usually inherit it at the current market value. So if your sister comes in and she's like, hey, guess what? I found this really cool vase. Why don't you sell it? Don't worry. Don't pay me for it. Just sell it. Keep the money. That's zero inventory. When you inherit something, it's a little bit different of accounting because there's actually a value attached to it from the estate coming to you. And that's what they call a step-up basis. So the basis in tax language, the basis just means the cost. That's all basis means. So at one point, your mother-in-law paid something for whatever the item is. That's the basis. And then when we say step-up in basis, when it goes through an estate, it gets revalued. It gets stepped up to the current cost, the current market value. So that's how I would price anything that came legitimately through like the legal form of an estate and came to you. If stuff was just given to you without it coming through an estate, like the legal process of an estate, then it's free and your cost is zero. Can we talk about selling our personal items? Sure can. Asking for a friend who has a giant collection of vintage treasure she spent a decade purchasing. Absolutely. We all have those friends. So the value of those items are whatever you paid for them. And you probably didn't keep receipts when you paid for it because who does? And when you buy a picture for your wall, at the antique store 10 years ago, you're like, oh, this is cool. Ditch the receipt. It's at the bottom of the purse. It gets emptied out in the garbage, right? That's what happens to me. That's what I do. So what you need to do is go and recreate that the best of your ability. You need to look at it and say, you know what? I really think I paid $80 for that or whatever. You need to recreate it the best of your ability and document your recreation. So document. If it was an art piece, if it was a vase, whatever it is, list it out, have an inventory listing, and list, if you could find the receipt, what it is exactly. If not, why you think it was that, and always err on the conservative side. So if you have a piece of art that you bought 10 years ago and you're like, oh, I'm not sure if I paid 100 or 300, go with the 100. Just be safe. Just eat the cost for, a little bit. Just bite the bullet and go with the lower number, because that's the safest route if by chance you're ever audited. And y'all, there's such a small percentage of people that are audited. I don't say that to encourage you to do anything illegal. I'm just saying that to remove the fear. If you're doing what you're supposed to be doing, it's not a fear that people should have. But you hear, oh my God, if I'm audited. I will talk about it just in the sense of, this is proper business and what you should be doing and what you should keep in case that ever happens, right? So when you're recreating, not only are you going to pick the lower price that you think it may be, but also maybe if you remember where you bought it from, anything you can write to try to recreate that just kind of supports your value in it. The IRS is big on documentation. And people are often surprised on this because we don't send receipts in. We don't send backup stuff to the IRS, right? And if you've never been audited, you're like, why in the heck do I have all these boxes of receipts? I had an incident that stumped several CPAs. Hold on. Okay, I'm going to go back up. I missed one question first and I'll come right back down. What if this is just a side gig for now? Nothing changes. This side gig is a business. Nothing changes from what I'm telling you. So the minute you picked up, thank you for buying the PDF. You guys, if you're buying any PDFs, just make sure you DM me so we can get that to you right away. DM me your email address. I had to finish the whole sentence. The minute you pick up that phone and hit go live and somebody swipes and you make a sale, you're in business. You have to treat all of that the exact same. The IRS actually calls out side gigs, and they use that language, side gig, when describing your business. So there is nothing different than what I'm telling you for that. I had an incident that stumped several CPAs. This is a hard one. And all of this said, make sure you have a good documents for the next 5 years. Oh, yes. Okay. Absolutely. Back on that. The IRS, they're not so caught up on numbers all the time. I was talking about this morning when we were talking about buying equipment for your business. They want the documentation. Because we don't send it, it's easy for us to forget that. But we're supposed to be keeping proper logs, proper receipts, proper justifications on everything. When we talk about, I'm going to write off 65% of my phone on my taxes, that's fine. But how did you come up with 65%? You need to document that. The IRS requires you to document that. Can you touch on disability and whatnot? I think a lot of people are confused. I know I am. So disability and whatnot is no different than disability and any other job. So when you're on disability Social Security, there's a certain income amount that you are allowed to make. And I don't know what that is. I don't deal with Social Security a whole lot. It's been a while. But there's a certain income that you can make without it affecting your Social Security. Once you go over that, it starts to affect your Social Security, and your Social Security may be reduced. Whatnot is no different. However, what they're probably looking at, the numbers is not in your sales. They're looking at what you're reporting on your Schedule C as your net profit. So when you start thinking about it, and I'm going to pull a number out of thin air. This is not the right number. It is just something I'm making up for an example. If Social Security says, okay, we're going to start to reduce your Social Security if you make $20,000. It's not $20,000 in sales on whatnot, because then you have to deduct your cost of goods, like we were just talking about, and all of your expenses. Maybe your net profit is only $2,000. So it's not the 20, it's not your gross, it's the net that they're going to look at. That's the only way they interact. But whatnot is no different than any other job or any other income source when you're on Social Security. Is it okay to file as cash if you earned close to what you spent and it's your first year filing? I personally would not file as cash unless I had somebody recommend it or my situation lent to that. Just because it's your first year and what you've spent isn't really enough justification for me as a CPA. That wouldn't be enough to convince me to do it on my return. there would need to be more circumstances in order for me to do that. My 1099s and Ks were about 80K off my books. Yes. And what's the question? Jennifer asked me the question. Okay, I'm going to wait till I see more. I think I'm caught up on questions, but if I missed any, let me know. So everything we just talked about is all before all those other expenses. What am I plan to do? Let me run another giveaway. I keep forgetting to run giveaways. I get talking and I forget. I'm embarrassed to share my numbers. I earned under 6K after expenses earned $600. Don't be embarrassed, and please don't. I don't want anybody. Thank you for your purchase from the band. I don't want anybody ever to feel like they need to share numbers. Thank you for sharing, though. I appreciate your transparency in that. That was very just generous for you to put that information out there. But y'all, don't ever feel like you have to. Don't feel like you have to justify your existence as a business owner by how much you make. That's nobody's business. That's your business. Obviously, share it with your CPA, your tax professional, your financial advisor, whatever it is. But you'll see people on Whatnot and they're like, I made 6 figures, blah, blah, blah. Good for you. What did you net? So the people only share. They share in a braggy, egotistical, I made this much money, and they disguise it under this thing of, well, if I did it, you can do it too. Yeah, well, if you're encouraging me to do it, then give me the whole story. Give me the whole picture. If you're willing to share the top half, share the bottom half, and let me know what the whole picture is. Exactly. You're all, Moody, Litcho put it perfectly. We're all here for the exact reason. No need to be embarrassed. But during these shows, I just want to make it clear, I will never ask for that information. I just believe that's personal information. Now, if you choose to share it, that's on you. But I'm never going to ask for it. Okay. So that was our whole cost of goods. My insurance company sent credit cards for me to process as payments for clients. Okay. Just information I like to share, but because it took months. Absolutely. Yes. I'm sure it took months. You know what? It's okay. People will say, oh, I made $100,000 on Whatnot. Okay, that's 6 figures. You hit 6 figures. I give away 20% of my inventory. Is there a gift section? There is not, Ladina. So when you give away inventory, and this is a really good question as we talk about inventory, when you either give away, you're like, this isn't going to sell. I made a bad purchase. I'm going to donate it to Goodwill. All you do is take it from an asset and move it to an expense. There's no charitable contribution. You're taking the expense of that on your Schedule C. So giving it away is no different than selling it, except that you didn't make any money off of it. You get the expense, you have no revenue. Whereas if I sold it, I take the expense, the cost of goods, and I get that revenue. So there is no charitable portion of that. And now, if there are personal items that you pulled into inventory, so earlier we were talking about personal items, and things that people gave you, if you have zero cost in it, if it's zero cost, your sister dumped all of her closet on your floor and said, take whatever you want and go sell it, right? And you have zero cost, and you go through and you try selling it, and you're like, girl, you are way out of style. That's 20 years old. I can't sell your stuff. And you give it away, because you had zero cost, you have zero expense on your Schedule C. Now, because you didn't have anything, you didn't claim anything on the Schedule C, now you can take it to your personal tax return as a charitable donation and claim money there. But you can't double dip. You can't have an expense and a charitable donation. It's not possible. That's why you stopped. I have no idea how to figure out the value of my income. I have accumulated so many paintings. Yeah. Moody, message me. I'll be happy to talk you through some of that. I would suggest, Moody, find a CPA, find a local firm, and go talk to them. Because it's hard for me. I'm not allowed to give tax advice specific. I can't look at your numbers and say, oh, this is what I would do, help you with your tax return. I work for a large company, and my contract prohibits me from doing anything for a fee like that. What I can do is say, this is what the IRS says. This is how I interpret it. This is how I read it. I can ask you questions. So there's occasions where people will message me And I won't give advice, but I will say, maybe you can think about this. I would ask these questions to your CPA. So I can walk you through stages of stuff, but my contract prohibits me from actually doing services. Is there a way around the writing off what I lose out from my insurance payment? So if they only pay their contract rate of 65% of the 160 we charge, that would, yes and no. So if we go to, if we pull up the income section, and funny enough, I am actually talking about this next Friday on my talk show, Friday morning at 7 a.m. But let's go back to that Schedule C and pull up the Schedule C. I will show you where you would write that. But before we do that, who's getting that giveaway? Ladina, you're getting that giveaway. Let's start another one. And we're going to go back to the Schedule C really quick and look at that income. Okay, so go up to page 1. Okay, right there under income, the very first line says gross receipts, okay? Gross receipts are sales. So this is where you put what you sold it for. So if you sold your service for $160, that's what your gross receipt is. Line 2 is returns and allowances. Well, then you discounted that service down to $65. So what is that, $95? Whatever the difference is between the two, that's your allowance that you gave. So that's a subtraction from your income. So that's how you would report it on there. So at the end of the day, it nets to the same, but you could report it on 2 lines. The bottom line is going to not change though. All right, thank you, my love. I just wanted to point that out where it would show up on your Schedule C. If we have a ton of inventory that we still bought, last year, how does that affect taxes? So Awesome Vintage, this is what I was talking about just a little while ago. If you are using the accrual method, so let's just kind of think through what happens when you're doing inventory. But before I do that, because this is kind of an accounting topic that leads to taxes. If you guys, most of you, I'm assuming, are business owners in here, you're sellers, and you're like, hey, I got some questions. Starting Monday night, I am doing a basic reseller accounting course. I'm going to be doing it for 12 weeks every Monday night here on Whatnot at 6:30 p.m. It is also going to be on YouTube. Oh, it's back here. Here you go. Ledger to Leadership. My husband put it up there for me. This starts Monday night. I already have the shows scheduled. They're going to be hour and 15-minute long shows. We're going to go for 12 weeks. Every single week, let me show you. Hold on. I can't reach. It's too far away. Every single week, we're going to go through a different topic. So we have 12 topics here. I wrote this book myself. I wrote this 158 pages to go along with the accounting course. It is not necessary to buy this book. You could just show up with a pen and paper. The class is free. It's also on YouTube if you're not available at that time. However, every single week, we're going to go through real life reseller examples. I'm going to take you from the accounting equation. We're going to start at the very beginning, talking about assets, liability, and equity. You get some notes. This is the core of what we're talking about. We go through some more core. I give you real life reseller whatnot examples. We're going to work through exercises each week with your numbers. You don't have to share them with me. This is all, you can just write it down on pen and paper. You can purchase this to use this. And then every week we also have worksheets that go along to help you in your business. Every single week. It's the same format over and over. But again, show up on Mondays because we are going to go from the accounting equation all the way through a set of financial statements. And now what do I do with them? How do I use this information? How is this useful in my business? What kind of decisions can I make? What kind of ratios can I do? What kind of numbers can I pull from this? How is this data useful to me? So we're going to go through that whole gamut. Accounting for inventory is one of those chapters. 1 week is going to be solely on inventory. So let's just do very high level of what that is, of the inventory. All right. No, don't be sorry. Always ask the questions. I'd much rather you guys ask questions, and I will answer the same questions 10 times. I'm okay with that. When you buy something, let's see. I start with the dollar bill, right? I start with some cash. Cash is an asset, and we're talking accounting, not tax here. There's a difference. We'll talk about that in a minute. I have some cash in my hand. I'm going to trade you my cash for a physical item. Both of those things, cash and the physical item, are assets. Those are things that I own, okay? It's not an expense. When you buy that inventory right at the minute of purchase, it's not an expense, all right? If you're doing cash accounting, like we talked about for your inventory, it becomes an expense immediately. When you're doing accrual, it just sits there as an asset. When you sell the item, then it becomes your expense down here on your books. So that's kind of the difference between the cash and accrual. Hopefully I answered your question. Let me go back and see what it was exactly. Total inventory that I bought the first year, how does that affect now taxes? So if you choose the small business exemption and choose to count everything as cash, write it off, you take all of that expense in year one. I would suggest, I went through a whole example. I wrote it all out, numbers and everything. I would suggest going back to YouTube and taking a look at that. We're always broadcasting YouTube. And you can see what happens with the exact same scenarios if you do cash accounting versus accrual accounting for your inventory. It'll show you both examples. All right. Let's talk. Oh, who's going to get that giveaway? Sassafras Jules, congratulations. Thank you for being here.
Congratulations.
Okay. The difference between bookkeeping and taxes, because I've talked a little bit about that tonight. I mentioned for your bookkeeping or for your taxes, there is a distinct difference. Nobody, and I mean nobody, should be sitting here right now at the end of February trying to figure out what their income and expenses are. You shouldn't. There should be no reason why January 1st brings anxiety about April 15th. None whatsoever. As a business owner, as a responsible business owner, you should be keeping your books, doing your bookkeeping, recording your income, recording your expenses, maintaining your inventory, keeping a mileage log. All of those not so fun things, right, should be done on a regular basis for multiple reasons. One is because that's what responsible business owners do, and you need that information to make decisions. How do you know if you get 6 months into this and you're like, I'm just not making a lot of money. I thought I was making more. I have all these sales on whatnot, but my bank account is so low. If you're not tracking that, how do you know to go back and look and say, wow, I've spent way too much on shipping. I need to dial in my shipping costs. I'm spending way too much on inventory. My profit margin is 10%. I need it to be 40%. What do I need to change to get to that point? If you're not keeping up with your bookkeeping, you can't answer any of those questions. You're operating from your gut. You're operating from feeling. Business owners don't operate from feeling. They operate from numbers and data and true information. New business owners are just learning 100%. Some states tax inventory. Would it be different from federal taxes versus state taxes? 100%. There are some states that tax tangible property, where you have to fill out a tangible property or tangible tax return. It's been a while since I've done one, every single year with the state. Florida used to do that off the top of my head because I used to live there. Every state is different. So that's up to you to make sure that you know your state rules on that. When I'm talking here, I really focus on federal taxes because the federal tax is what's common to all of us. Because the people on Whatnot are from all over the country. I don't typically touch on state taxes. What I do say, thank you for your purchase from the band. What I do say is that a lot of times your state tax follows most of the federal rules. It's kind of a general rule. Most states follow federal rules, but every state has their own nuances about things. So if you feel like you can do your tax return, just make sure the state has instruction booklets and everything else, just like the federal does. But if there's questions, definitely seek a CPA or a tax advisor. And yes, and what you're talking about, Honeysuckle, is the tangible tax. So there is a separate tax that's completely different than state and federal called the tangible tax that some states do charge, and you have to fill out a whole separate return just for that. All right, I'm going to take a breath here. I said that. I'm like, I'm going to take a breath. My husband's over there rolling his eyes like he never hears me going on and on and on. Okay. We're talking about your accounting difference in bookkeeping. Okay, so I harped on you guys about keeping your records month to month, keeping good bookkeeping. Then you get to the end of the year, okay? If you're keeping good books all year long, all you need is 1 quarter of information. You need 3 months of information. You can start to project what's going to happen in quarter 2, 3, and 4. Okay. And then in quarter 2, now you have 6 months of information. you got 6 months of averages, you can start to say, you know what? I'm averaging X number of sales each month. I can expect, if all things remain equal, to continue to earn that much money each month, right? You may not be right on the dot, you may not get it to the penny, but the more you're tracking, the more information you have historically to look at, you can start to figure out what's going to happen in the future. You can start to base things. How, for those of you, so many people come to Whatnot and they're like, oh, I want to quit, and I want to quit my full-time job and do Whatnot. Wonderful. That is a wonderful goal. So I put my choice as cash not accrual, and my inventory did not get deducted on taxes. It was not counted in the cost of goods sold. That's really weird. I would go back to whoever did your tax return and ask them to explain that to you, because your inventory does get counted one way or the other. So absolutely go back and ask whoever did your tax return about that. Because not knowing any other facts, just that piece of information that I have doesn't sound correct. Who's going to get the giveaway? Pink Princess, congratulations. Okay, so you're going through the year and you can make these projections based on where you've been, right? The other side of that is that if you're making enough money, and I'll tell you what enough is, what the IRS says, you are required. The IRS says, look, I don't want to wait. Hello, Southern Charm. The IRS says, I don't want to wait till the end of the year to get my share of tax money. If you owe me taxes, you better be paying me throughout the year. Sorry, you guys, I didn't mean to hit my microphone. That was loud. You better be paying me throughout the year. Well, if you're not keeping your books, there is no way that you know if you owe estimated taxes. So what happens with that? You don't keep your books all year. You get into January, February. You're stressing out. You don't know what to expect in April. You're like over here like, oh my God, am I going to owe money? Am I going to get a refund? Do I owe estimated taxes? Why put yourself through that? Like, there's no reason to put yourself through that. All you got to do is keep proper books throughout the year. And then you show up at the end of the year. Here you go. You're done. And you already know you've paid in what you need to pay. That's my whole soapbox. I can go on and on about that all day. I have been on for about an hour. Are there any other questions? Non-substance August, good for you. But you didn't know what you were doing. Well, now you do. Now, Moody, you do. And come to the accounting course and you'll know how to do the accounting. So I am really excited about this accounting course, you guys. We're really going to walk through. If we don't have a CPA, how do we set up payments? So estimated tax payments. If you don't have a CPA, I was going to tell you what the IRS says about that. If you don't have a CPA, you can figure out estimated tax payments. Go to, number one, I have a PDF if you're interested that explains estimated tax payments in detail and walks through various scenarios. Like if you're doing Whatnot full time, if you have a W-2 job and Whatnot, kind of gives you an idea of what's going on with estimated tax payments. The other thing you can do, IRS is free information. You can go to www.irs.gov. Don't go to .com. It's not a good website. It's just don't go there. Go to .gov. And so you can go there, and in their search bar, search estimated taxes. There's publications that tell you everything you need to know about estimated taxes, and they're written in plain English. They're not written in fancy IRS talk. There's some verbiage in there that may be a little like, oh, that's weird. But they're written in plain English. Basically, the way estimated taxes work, on your 1040, on your tax return, there is a line that says total tax liability. It's usually on page 2. There you go, irs.gov. Are you going to type in estimated taxes? Let's see what comes up. Right there, tax withholding estimator. So you can figure out how much you should if you are a W-2 employee. Go back. That's for W-2s. I'm just pointing it out. Estimated taxes. The second thing that pops up, who must pay estimated taxes? It's going to tell you all about it. It's going to give you a publication that you can go to. All right. So there is free information out there. If you're like, look, funds are tight. I can't afford a CPA right now. You can get free information. It is there for the taking. And, a couple of hours, get yourself a cup of coffee, dig into it and read it. Is it like, the best, thrilling novel you've ever read? Absolutely not. It may put you to sleep, but you're going to learn something. how much should a CPA cost? CPAs vary drastically depending on if it's a local firm or a large global firm. A small local firm is what I would recommend, particularly if you're starting out in business, is a small local CPA firm. CPAs charge anywhere from, $150 to $500 an hour, and they normally charge in 6-minute increments. This is important for you to know. I think because I job for months, I'm not going to have to pay. Okay, well, great, Moody. That's awesome. Because you probably paid it on your job. CPAs charge in 6-minute increments for the most part. Some small offices have like flat rate fees of things. And why is this important to you? Because if you're going to go to and talk to a CPA, you're going to save yourself money if you have all your ducks in a row as much as you can before you walk into that CPA office. Do not walk in with a box of receipts. Do not walk in not knowing as much as you possibly can about where your financial position is. Because if you do, you're paying for time that's not productive. You want to be able to walk in and they say, do you have financial statements? Are you maintaining your records? How much inventory do you have? What are your goals for the next year? They're going to ask you all these questions. So the more, Dina, congratulations, you got that giveaway. The more you can be prepared, the less cost it will be. And the same thing, learned that the hard way. The same thing if you have a CPA doing your taxes, if you give them a box of receipts and they have to go through them, first of all, some CPAs will just say, no, we're not doing that. Others will be like, yep, that's money. They're not going to do it. They're going to give it to the assistant, and it's going to cost you $200 an hour, a roundabout, for some assistant to flip through every single receipt that you could have already had organized and done if you were doing your bookkeeping throughout the year. So just a way to a shoebox full of receipts is not a good idea. Never a good idea. Never. So just a kind of some tips to working with your CPA. Another thing, if you're looking for a CPA, I highly suggest starting with a local firm. There are a ton of CPAs that is just them and maybe a bookkeeper, or maybe 2 CPAs and 2 or 3 bookkeepers, very small firms. You're going to get the best deals and the most personalized experience through that. It's no different than a department store, right? You go to a little boutique, you're going to get that one-on-one personal experience, where if you go to Macy's, you may get somebody say, can I help you, right? Same thing like with the doctor. You go to a doctor, I don't know, that's not a good, my husband's telling me to use that example. I don't, that's not a good analogy. We're going to something else. Okay, so when you're looking at a CPA, you can also search them up. If you do a Google search, and then once you know their name, thank you, my love, you can go to your Department of Professional Regulations. All CPAs licensing is public information. So once you find one, you can look them up under the Department of Professional Regulations to see if they have any disciplinary actions against them. So you have a way to check if they're legit or not. Did you already explain the 2 ways to account for your inventory? Which one is better? I did, Trisha. You can watch this on YouTube because it was a really long explanation, and I think that I don't want to go through the whole thing again, but I did. Go to YouTube and you can see it. We actually wrote out all the numbers so you can go through and see. So those are some of the things I would think about if you're going to a CPA. Now, the other thing most people don't think about, places like H&R Block, I'm not big on, there's other tax ones I'm not big on. H&R Block is pretty darn good. Let me tell you why. Now, just like anything else, there's going to be bad offices out there, but in general, as a CPA, before I started working for the company I work for now, I worked part-time in the evening, second job at H&R Block as a CPA. I know the systems they use. I know the processes they have, and they have business divisions. H&R Block just isn't to go file your personal tax return. They actually have business divisions that are open year-round with CPAs, and they're a little more affordable than some of the CPA firms. So don't just rule them out. You had a bad experience. Some people have. I'm not saying, it's just like anything else. There's good and bad. But a lot of people don't realize that H&R Block is a countrywide, it goes every single state on not just your 1040. They're not open just January through April. They also offer business services that are very good. Great. I'm so glad you're going to use them. Look, sometimes they get a bad rap. And again, there's good and bad out there. But the business services are they're people that have more experience. I'm going to be honest. If you just go in for a 1040, you may get a tax preparer that this is their very first year doing taxes. And, you just happen the luck of the draw. You get the one guy who's never done taxes and all he's had was 8 weeks of H&R Block training. Maybe that's not the best, but you can always request. You can say, hey, I'm a first year business owner. I need a little more advice and talking through, and I have a unique situation. You can request somebody more experienced in the office that you're going to. They lobbied to get rid of free filing. Okay. If you don't feel comfy with the one assigned, yes, you absolutely can ask for another 100%. And it's totally okay to do. This is the thing. You have to be able to, this is what you were saying about doctor. Thank you. It finally just clicked. You have to be able to jive and to have that vibe with your CPA. Think about this. Your money is the lifeblood of your business. Okay. You have to be able to speak freely. I already told you guys earlier, I will never ask for your numbers. You don't have to talk about your numbers publicly. But your finances with your CPA, you should not hide anything from them. You should be totally open and freely feel that you can discuss anything with them the same way that you can discuss health concerns with the doctor. Pink Princess, congratulations. So when you're interviewing CPAs or tax advisors, make sure that you feel that you can really talk to them, because if you're holding back and hiding things, they can't properly advise you. It's rigged. It's not rigged. All right, you guys. Are there any other questions before we go? Can we write off home expenses since the biz is in your home? Awesome. You absolutely can. So next week? I've put in for these shows, on the title of the show, I've put in the different topics. So every week I'm walking through another section of the Schedule C. So I'll give you a brief highlight, but we are going to have one whole Friday night just about home office. But yes, you can. So there is a spot on your Schedule C that you can write off either actual expenses, or they have what they call a simplified version of the space you use for your home office. What the IRS says is that it has to be used primarily and exclusively for the use of that business, the space that you write off. What that means is, if you have a second bedroom and that whole bedroom is your whatnot business, you're not using it for anything else. Scroll down a bit. We'll show you. This is the Schedule C. So if you scroll down, page 2, we keep going and it's, well, did we scroll by it? We must have scrolled by it. Go back up. It's in here somewhere. Right there, up right there on the bottom. Line 30, expenses for business use of your home. So line 30 is where you would go. My whole house is loaded with inventory. We only use bedroom, bathroom, and kitchen. Okay, so let me tell you about how to figure it out. And again, we're going to dive into this in more detail, but line 30 is where you go. Also, this Schedule C, there is a publication. If you go back to that IRS website and you type in Schedule C instructions, there's a whole booklet that walks you line by line by line by line through this whole form. Again, all of this is free information. So it's stuff that you guys can go and get and read about. So let's go back. We're good with that. Thank you. For your home office, it's primarily and exclusively is the two words that IRS uses about home office. So if it's a whole bedroom, you can take the square footage of that bedroom. And again, there's two different methods. We'll go into the methods. I'm just kind of giving a general idea of what you can use. If only you're using half of the bedroom, okay, just say, you know what, there is a bed in there. Occasionally, my cousin from out of town or my best friend comes and spends a night, and this is also a guest room, but I use half of it exclusively. I have all my shelves in there. I have all my inventory, and I do my shows over there in the corner. Then you just take the square footage of the piece that you use. I have a basement here with a curtain. I can't deduct my whole basement, but this part that's partitioned off is my studio. I can deduct that. So you have to look at what you are actually using primarily and exclusively for the use of that business. If you have your whatnot shows at your dining room table, but then every night you clear the table and then your family sits around the table and eats their dinner, that's not primarily and exclusively. You really can't take that space. So you see there's like a little bit of difference there. Inventory storage too. Yes, inventory storage too. But now, if you have shelving and you have your Christmas stuff for your Christmas tree, your own personal Christmas stuff on the bottom 2 shelves, and then the top 2 shelves are your inventory, that gets a little messy. That's like doing your shows on your dining room table, right? So this is part of when we're organizing and setting up a business, trying to dedicate specific spaces, even if they're really small spaces that are primarily and exclusively for the use of your business. So in that case, I would get 2 shelving units and do 1 for business, 1 for my personal Christmas stuff. I know it sounds like a lot, but if you really want to be like, okay, look, I'm going to be on the right side of the law here, you start thinking about these all the way through. I always say, think about it if, and I said, remember, the chance of being audited is really small. But think about if you were ever audited, could you look an auditor in the eye and really back up what you did on your return? If you can say yes, then you have nothing to worry about. If you're like, I fudged that a little bit, and you're kind of like, oh, that makes me nervous, then rethink how you're doing it. All right, you guys, with that, I think we're going to go raid somebody. I have tomorrow, you guys, if you are so kind and you want something to do in the morning, we have What's in Your Mug raid train. We have 12 great sellers, some newer people, some OGs, and everybody has to sell 3 mugs along with whatever they normally sell with something in it, some type of surprise. I've asked people to bring it, be creative. We have cross category. So if you're so inclined and that sounds like something you want to check out, we have that going on in the morning. And then tomorrow afternoon, I have my primitive show, and I will have all of my shows loaded. My primitive's already loaded. That my What's in Your Mug will be loaded in the next few hours. And with that, let's go find somebody to raid. Thank you guys for hanging out with me. I will be back here next Friday night. But if you've never been to my 7 a.m. chat show, come check it out. Let's go see Farmhouse Vintage with Donna. Do not know who she is, but let's go make a new friend.